This guy does a lot of running. Look at that man. Osaic chief strategist, market strategist, Phil Blancato. Phil, here's what I thought was really pretty interesting, right? So unlike the surge that began earlier, we sold off in the beginning of the year. Then we had this big spike into earnings season. This earnings season, we actually went down initially.
Yeah.
What was it about midway through this earnings season that finally convinced folks, investors, that this is the real deal?
I mean, there were a couple of things that got our attention. Obviously, there was the panic of what headlines were suggesting, whether it's the Fed hiking rates, the war. But what people finally realized was you're looking at maybe the greatest earnings cycle of their lifetime. Forget top-line earnings, and I get all that. But if you look at the margins on the S&P 500, they're between 12 and 15%. That's double.
What if someone says half that's Google? I mean, what about the naysayers?
Let's take it out. Let's take out let's take the entire AI trade out. Guess what? It's still 12.5%. Let's take out the entire AI trade from the earnings cycle. It's still 32%. So for anybody who wants to be a naysayer, go for it. Skip the market, and we'll enjoy the ride higher simply because you're looking at a great. And by the way, we needed a couple great earnings sessions.
Right.
But you know what the PE on the S&P 500 is right now? 20.
20.
We're doing 22, 23. We're at 20. We grew up with 18. So we're not inexpensive, but we're certainly not expensive. And the earnings season is suggesting that you should be owning stocks now.
So last week was great. The 1 week for almost everything. The NASDAQ, the S&P, high yield bonds. It was pretty good, right? Here's the thing that's been interesting to me. The volume.
Yeah.
No matter what asset class, it just feels like there's a lackluster. There's something missing, like something is gnawing at investors.
That's why I got a nice suntan. People are at the beach. You know, in the end, let's not forget, seasonality in markets does matter. And when there's a lack of conviction because of whether the war's done or not done, because every day's a news story,
right?
Or whether or not the Fed's going to hike or not hike. Well, it was hike last week. Now it's not hike because the unemployment data suggests it maybe slow down. But, I mean, you hear a lot of naysayers saying there's 3 hikes coming, which is nonsense to me. So those headlines mixed in with the summertime of going back to school, people still on vacation.
So just seasonal stuff. There's nothing. I shouldn't read too deep into this.
A bit of both.
By the way, gold is over there.
Don't read. I'm sorry, you're right. Don't read into that.
Okay, gold has made a nice move. It's starting to come on nicely.
Yep.
Just last time you were on, you gave us Newmont, NEM. What's going on there?
I mean, the reality is you're in a super cycle for commodities globally, and gold's getting caught up in that a little bit. Now, gold's not something you use for a lot of stuff, but at the same time, the Fed's helping gold by potentially hiking. That's a win for gold. And the rest of the world is starting to need, there's a demand for power.
Right.
We just keep, look at the earnings on the energy sector. 125%, for gosh sakes, is telling you that all that stuff you need to make the power is a great place to be.
Let's talk real quick about the state of the economy. We had the jobs report. Manufacturing data has been phenomenal. Inflation data has been coming in better than expected. And the consumer, as you always point out, somehow keeps pulling it out.
Guess what? The bottom line. Guess what? Back-to-school spending is expected to be $48 billion, $835 per family, the highest number ever. So don't tell me that the consumer's mad about gas prices. Maybe they're mad about it, but they're certainly not spending about it. Inflation. If you look at things like rent. They've come down a little bit. You look at what's causing inflation. It's your insurance cost is much higher, but it's not food. Food is basically flat, 2.5% year over year. So inflation is not the animal everyone expected. And leaving gasoline aside, because that's subjective, we could make the case that if you include gas, it makes you mad, but if you take it out, inflation is not your issue. That's why Kevin Warsh is saying, hold on, I'm not with my rest of my game.
Right.
Manufacturing is the most exciting story for me. We are now 7 months in with expansion in manufacturing. It hasn't happened in 3 years. For all the naysayers in the one big beautiful bill, in living color, you're seeing $2 trillion go back into the market right now, building new stuff, which to me is exciting, and jobs. We're in a no hire, no fire world because we're not bringing in immigrants.
And I made the point Friday, we took out 53,000 jobs, which is what the administration is trying to do. Yep. The other 2 laggards were the 2 lowest paying areas. And we had some other so-called low skills or low educational areas which up, but pay more, like warehouse jobs and construction. Exactly. You're reiterating light. And I'm glad you are, because I just mentioned they report this week. Just so the audience knows, I should have probably highlighted it. So it closed on Friday at 890. Today's range, it went to 937 to 824. This is a one-day range of about 110 points. Mm-hmm. So I guess the point here is this is a name you like, but you have to buckle up. It's pretty volatile. And the reason why I like it is because it depends on what you believe. If the AI spend is over, then don't buy this stock. If you think we're just at the beginning of all the stuff you need for a data center, including fiber optics, you buy this company. By the way, beautiful bounce off the 200-day moving average. Exactly. Beautiful bounce. This is a great company. You know what their earnings growth is? Yeah. You're talking 30, 40, 50% earnings growth, depending. One-year projections, over 100%. In fact, some analysts have at 160. So you're talking about a company that is at the
precipice of the picks and shovels of AI. The company that's in the middle of it. We need more data centers. We want to compete with China. We want to be able to power it, leaving legislation aside. This is a company you need to own if you believe that's the case, and I do.
All right. You like Amazon? We're going to skip that chart because I'm going to go down to you like Amazon and you like RTX, and I think you've reiterated. These are names you've mentioned before. This is a beautiful breakout, by the way. Congratulations.
We talked about it way back here, by the way.
No, great. But I also want to give you props because the last time you were on, Apple was reporting that day or the next day. Yeah. You told investors to stay away from it, that something wasn't right. It's pulled back a lot since then. It was around 330, 335 that day. It's down to 305, and today it got a sell from Jefferies. Yeah. Are we seeing now really where they're distinguishing this Mag 7 and all of these names? You know, they don't. It's no longer just one trade, but they are really being identified individually.
It's really hard to make a $4 trillion company $8 trillion, and when the costs of their goods get more expensive, and the consumer is being a bit more frugal, they get punished for it. And it's just the Mag 7 trading of itself. Look at NVIDIA stuck at a trading range now for the better part of a year. Microsoft finally broke out after a really bad 12 months. So to your point, these names are so enormous. They've moved the needle on their stock price. Fundamentally, something significant has to happen, and it's just too big now, and there's not enough sales, not enough revenue to move the needle on